Hi, I'm John Stevenson, the Guaranteed Retirement Guy, and today we're going to be talking about the secondary market for annuities. So you might be thinking about purchasing an annuity from the secondary market. What is that exactly? How does it work? What are the pros? What are the cons? And what would I recommend that you do? Well, these annuities, basically, they are purchased from people who already own the lifetime income payments. Okay, so basically what happens is maybe someone gets money from a lawsuit. Okay, maybe it's a lifetime income payment or they win the lottery. Okay, anything where you're getting these income payments and you're thinking, I don't want these income payments or I don't need all of them, and so I want to sell some or all of them for just a huge lump sum. It's kind of like if I were to, win the lottery, they'll either give me the option to take monthly payments for 20 or 30 years, or I can take much less up front. And of course, most people will pick the lump sum because they want as much as they can up front. They don't want to wait. And so this is where there is an advantage to buyers, because buyers come in and they're like, well, I'm going to pay you less than what you're going to get over time. And so my yield is going to be higher because I'm going to get more income. I'm going to get these lifetime payments and I'm going to use it for my retirement, and it's great. The problem is a lot of times, not all the time, but a lot of times what could happen and what has happened in the past is maybe someone gets a court settlement. Okay, they get these annuities that are going to give them a monthly payout for a certain amount of years. Let's say it's 20 years. And instead of taking it, they decide to sell it in a smaller amount, right? To a buyer who wants to give them a lump sum in exchange for monthly payments that will give them a lot more than they actually paid up front for it. So the problem is you buy one of these annuities and you start getting payments. What happens if that person who inherited this annuity or had this annuity in the first place was sued, or if something happened in the courts where maybe their kids came back and said, hey, you know what, we don't agree with this and we want those payments back? Well, essentially what would happen is that annuity that you bought from the secondary market is now frozen. Okay, you have no more payments coming to you until it's resolved. So that can be the risky portion of it. Now, of course, the upside is you might pay a smaller amount and get a higher return, a higher yield over that time period. And maybe let's say it's 10, 20, or 30 years. So there's definitely some upside to it, but you have to be careful. Okay, so it is the secondary market. And obviously people are looking to get rid of these monthly payments that they're guaranteed for so many years in exchange for a lump sum, a lower amount than they'll get over the years of those payments, but they just want the money up front. And of course, for you as the buyer, the advantage is to have that higher yield. You're getting more than what you put into it. And so it could be a really good investment. Now, my opinion is because of the risks involved, I would recommend, if you wanted to do something like that, buy just a SPIA or a DIA annuity, a single premium immediate annuity, or maybe a deferred one. And these annuities, you're trading cash, right? You're paying cash up front, a lump sum, except instead of paying it to a person, you're paying it to the insurance company. And then of course, that insurance company will give you that guaranteed payout for the rest of your life or the rest of maybe a certain period, 10, 20, 30 years. But if you were going to do that, then I would probably recommend you to go even a step further and probably look at fixed index annuities, because fixed index annuities give you much more flexibility. Now, the income may not be as much, but there's not very much of a difference. It's usually like a couple $100 a month. And the difference is you have full control. So instead of buying a SPIA where you trade your money in and they're going to give you this lifetime payment or these payments over a certain amount of time, guaranteed, and the problem with that is there's less flexibility. If you change your mind in like 2 or 3 years, it doesn't matter. They've got the money. You're held to the contract. It's irrevocable. Okay. With a fixed index annuity, it's not. You have a lot of flexibility. If you want to cancel those payments, you can. If you want to take your money out, you can. Okay. If you die early and you want to leave money to your spouse or your kids so they can use it to annuitize or to turn into another annuity for income for themselves, they can do that. So there's a lot of cool stuff you can do with fixed index annuities that you cannot do with a SPIA or a DIA. And so what I would recommend, if you're looking at the secondary annuity market, you have to be really, really careful. Make sure you're working with a good attorney that knows what they're doing, and also need to make sure that you understand the risks involved in purchasing and making sure that you own those payments outright, because you're not really buying anything but payments. Okay, that is what you're buying when you're doing any type of deal in the secondary annuity market. Now, with a DIA and a SPIA, of course, you own those, but they are not flexible and they are irrevocable. And so you really can't do much with them except just receive that income. With a fixed index annuity, you've got growth, you've got market protection. You could take income, which is very, very similar to a SPIA, and you could turn it off, turn it on. You got the flexibility to cash it out. There's a lot of stuff you can do with it that you can't otherwise. So anyways, I just kind of wanted to delve into this. So especially those of you who are beginning to look at these options and you're wondering which ones would work the best for you, I highly recommend that you book a call. You notice that there is a link below this video, and that goes directly to my calendar, and we can talk about your annuity questions, your retirement, what you're looking for. Okay, let's talk about getting you the maximum amount of growth, the maximum amount of income. If you're looking for market protection, we can talk about that as well. So again, book a call, and I'll be happy to answer all of your questions. So thanks again for watching, and we'll see you in the next video.